And we're live. How's everyone doing? Welcome to Tech Talk. This is your host, Jerome Parker. A little bit late, having a late night stream today, but it's all good. Before we get started, I want to remind everyone to click that subscribe button in the lower right-hand corner if you haven't already. I'm up to 441 followers. Thank you guys. You guys are being much loved, appreciated. If you haven't already, go ahead and click this like button. I'm going to go ahead and open up the phone line here so we can just go ahead and have that started. The phone line number is 502-791-6409. Once again, that is 502-791-6409. So today we're going to be talking about Facebook once again. Yes, I know. So Facebook is once again in the news. If you haven't heard, and those of you who trade stocks, I've definitely heard. Today, Facebook had the worst stock performance of any country in history. In a single day. In a single day, Facebook dropped 19%. It went from $217.50 to $176.26. I'm trying to find the number. I'm trying to find the actual number. I'm just gonna read the article from Quartz. Facebook's disastrous day on Wall Street was historically bad. Facebook lost more value today, July 26, than any other publicly traded U.S. company ever. Its share price began to tank in after-hours trading last night when the company posted second quarter earnings that came in below analyst expectations. Then Chief Financial Officer David Weiner said recent adjustments and challenges to Facebook's business, many a result of the scandal-scarred past few months and years, could have a negative impact on revenue for the next few quarters, and the stock price sank even further. Shares barely recovered during daytime trading hours today, starting at $176.26, a drop of about 19% from yesterday's NASDAQ close of $217.50. The price drop resulted in the single worst one-day fall in a company's market capitalization in Wall Street history, plummeting from $631.2 billion on July 25th to $511.5 billion today, according to Cintio. CEO Mark Zuckerberg is reported to have lost around $11 billion in his personal worth. It's the fourth massive drop in market capital for traded companies in 2018, with the new year now accounting for 1/3 of the 12 largest drops ever, according to FactSet. The previous record holder for the largest drop was Intel in September 2000, and prior to that, Microsoft in April of that year, the height of the dot-com bust. But we're definitely not in a bubble. No siree. All right. So that was from Quartz.com. If you guys want to check out the link, I will definitely post. I've already posted it on my Twitter. And if you aren't following me on Twitter, go to twitter.com/MasterShake08. So, why is this significant? Why is this important? Why does this matter? So, let's go back to the .com era. I was still a child myself, but I was old enough to remember this, hearing and seeing things about the stock panics of the .com bust. It was actually around the time that I started coding when the .com bubble was bursting. So what had happened was there was all these tech companies, the vast majority in Silicon Valley, and this is really the era that made Silicon Valley what it is today. There was a whole bunch of these tech companies making millions and millions and millions of dollars, okay? But the vast majority of these companies in IPOs, Knock free. I heard their stock prices drop. Yeah, it was the worst stock performance of any company ever, ever. Um, but like I said, so they were raising millions of dollars in these IPOs, but a vast majority of these companies like had no product. They weren't even. They were getting IPOs based off ideas. They had no tangible. They didn't even have like proof of concepts. Some of them. And then, investors were pumping and pumping and pumping, and then, these companies mismanaged the money, they never delivered the product, et cetera, et cetera. The vast majority of them went bankrupt. Billions of dollars were, wiped off the global table. So what happened was there was like it didn't do it all at once. It was like a few companies at a time. Don't ask me to bring up said company or name said companies because I can't remember, but you can definitely Google search and research it yourself. But like I said, like there was Microsoft and what was it, Intel? Yeah, Microsoft and Intel. And then it was like a snowball effect. But it was the big giants that were feeling that we're getting hit first, but a lot of them were still surviving, i.e., Microsoft and Intel. But so if we fast forward to today, in 2018, we're starting to see the same pattern. I don't know about you guys, if anybody who trades stocks, but in my portfolio this year has been getting hit. With all with all the political stuff going on with the trade war, which I'm actually going to tie back in a little bit, but I'm seeing a lot of my tech portfolio, tech companies, taking some hits. So, I think we're seeing the second .com bubble. So Facebook, but it's a little different because in the .com, like I said, a lot of these companies that were getting pumped on the stock market, they didn't have tangible products. These were really IPOs based off ideas. Fast forward, it's the timeline to create a proof of concept has shortened dramatically. So a lot of these companies now have proof of concepts and they have ideas, but what's driving the stock prices is public perception. I.e., Facebook being in the news for all the scandals with Cambridge Analytica and having to testify in front of Congress, having to testify in front of Parliament. We're being driven by emotion. So it's not good enough any longer to just put out a good product. You have to put out a good product, and the product has to stay in good perception. No, people did not care. I mean, let's be honest. The vast majority of people did not care that they were giving away their privacy to Facebook because they were enjoying Facebook and Facebook had a good perception amongst the population. They only started caring once the Cambridge Analytica story broke and once Facebook started being perceived in a negative light. Now everybody wants to go and grab their data, and I mean, all this stuff was available beforehand. You could have gone and grabbed your data before the Cambridge Analytica leak. You could have seen all of your activity and read the terms and conditions, et cetera, and had complete knowledge of what Facebook was doing with your data. But you didn't because it had a good perception. Investors did not care, even though investors know what's going on more than you and I do. Well, people who do not invest into the company do, because the investor money is what drives the decision. I don't care what people say. It's the investor money that drives the company's growth and direction. One of the double-edged swords of going onto the stock market, because you lose control in that way. So the investors knew what was going on with the data. I don't care, especially the top level investors. They knew to some degree. They only quote started caring and selling the shares and driving the stock price down when it's coming to when it's becoming public knowledge of the things that's going on. You see how that goes? Then they start selling because they don't want to be quote unquote associated with that image. When the big investors start selling or medium investors start selling, whatever, it causes everyone else to panic sell. You have fear and fear, uncertainty, and doubt, FUD. And then when it tanks, the investors who sold come in and buy back and make more money than they did before. So, I'm not saying, Facebook is going to be around. I think Facebook is going to be around for a long time, a very, very, very long time. Pause that. Yeah, Facebook is going to be around for a while. I don't think it's going anywhere. I don't think it's going to be the end of Facebook. But what I do want to point out is that let's compare Facebook to a civilization, an empire. Okay, go throughout history. Whether you're talking about the Greeks, whether you're talking about the Romans, whether you're talking about the Egyptians, whether you're talking about the Ethiopians, whether you're talking about the Mongols, the list goes on and on and on. Any civilization that had a huge sphere of influence, the civilization didn't fall at the height of its power. Invaders started coming into these civilizations once those civilizations started to show signs of weakness and topple. I make this analogy to say, like I said, I don't think that Facebook's going to go extinct, just like the Romans didn't go extinct, the Greeks didn't go extinct. They took a back seat in world power, but they're still there. Now, I am interested to see what players in the social media sphere try to capitalize on Facebook sliding and try to usurp them. Is that the right word? Get rid of them, take over their position as number one. This is a great opportunity. This is a great window for a newcomer to come up. Of course, Twitter, of course, Snapchat, of course, I say Instagram, Instagram's owned by Facebook, but that's kind of in its own category. But for sake of conversation and argument, I'll say Instagram. They're going to try to take that position as number one. Twitter, honestly, I think Twitter, if one were to usurp one as the number one, I think Twitter would probably be the one to do it. Twitter or Instagram, but that's another conversation for another day. But basically what I'm saying, there's a power struggle that is going to be associated with this. And it's going to be interesting to see how that plays out. Something else, and I haven't had time to do quite enough research to correlate the two, but I would assume that they are correlated. So a report came out today. Let me pull up the article. This again is from Quartz.com. The U.S. is rejecting more and more Indian H-1B applicants. The Donald Trump administration's crackdown on work visas is hitting Indians disproportionately hard. Between July and September 2017, the U.S. denied H-1B visas to 23.6% of Indian applicants, up from 16.6% in the 3 preceding months, according to the latest data. And there's a link to the PDF in the article. Released by the National Foundation of American Policy, or the NFAP, a nonprofit, nonpartisan organization dedicated to public policy research. This increased scrutiny is the result of Donald Trump's Buy American and Hire American executive order signed in April 2017. It took some time to get people into many of the key positions, immigration attorney Greg Siskind told the NFAP. Once he saw who was being appointed, a who's who of stars in the anti-immigration world, no one was really surprised with what we're seeing. Besides the uptick in outright denials, there's also been a sharp increase in the number of requests for evidence, or RFE. These are notices that U.S. authorities issue to U.S. applicants seeking more information on their applications. Between July and September 2017, the Trump administration issued 63,184 RFEs, compared to 63,599 RFEs issued during the 9 months prior. Several lawyers previously told courts that their clients were struggling with the high numbers of RFEs, which not only delayed the visa process but also increased costs for companies. Here, too, Indians take a severe beating. Between July and September 2017, up to 72% of Indians applying for H-1B visas received RFEs, compared to 61% for all other countries. Between October and December 2017, during which period President Barack Obama was in office, only 18.2% of Indian applicants were asked to submit supplementary material. And it's not just the H-1B applicants who are in trouble. Other U.S. work visas, almost half, 48% of the petitions for the L-1B visa category meant for existing employees with specialized skills filed for Indian nationals were denied between July and September 2017. As NFAP explained, due to the time and expense, employers and attorneys only send in applications for individuals they believe have a good chance of gaining approval, which means it makes little sense to attribute an increase in the denial rate to a sudden influx of unqualified applicants rather than new restrictive policies. L-1B petition denial. Oh, that's a graph. Sorry. Even the L-1A visa, used by firms to transfer managers and executives to the U.S., saw the number of denials for Indians climb up to 16.4% by September 2017, up from 9.5% in December 2016. This trend may further pick up pace in the future. In a July 13 memo, the U.S. Citizenship and Immigration Services equipped its officers with the right to outright deny an application without furnishing RFEs first. All right. So this is why I think that this also contributed to a stock price drop with Facebook. Facebook, along with the vast majority of these big IT corporations out in Silicon Valley, rely heavily on H-1B visa applicants. Now, while I am for the training of more domestic computer scientists, I also recognize that because of our lack of initiative of training domestic computer scientists, we have a huge demand with a low supply of computer scientists. Therefore, it makes sense if you're going to deny H-1B applicants when we are in need of them, then you must simultaneously do rapid workforce programs to train domestic computer scientists. Otherwise, you're just asking for the economy to struggle. Whether I think it's right or whether I think it's wrong is neither here nor there. I'm looking at it from an analytical point of view because it is what it is and we're already here. I do advocate for workforce programs. I think since these companies need computer scientists so badly, that they should be given tax incentives or tax breaks for funding said training, advanced workforce programs. Companies like Facebook, tech companies every company in general that needs IT has a specialized need for what they need. You feel what I'm saying? So like Facebook, right? They're gonna need a bunch of PHP developers, React developers, or React/React Native developers, and Java developers. Okay, so it makes sense for Facebook to have 6 to 8 week training programs in, I don't know, let's say JavaScript and React. That way they can teach what they need, so the people who are learning, on the job specialized training, and they can do that. They can fulfill the Hire American, Buy American, Hire American, or whatever it's called, and it's a win-win. But as it stands, with the high demand on H-1B applicants, this is definitely hurt them, and investors see this. They know this. So, I believe that this also contributed to the fear, uncertainty, and doubt for the Facebook stock. But anyway, guys, tell me what you think in the comments. Like I said, subscribe to the video. If you haven't been to my website, head over to JeromeParker.com. I am doing a tutorial currently as we speak on Python for beginners. I'm actually doing the one-on-one class with a fellow colleague of mine. He wanted to learn how to code. So this guy has never coded Python before, and I'm going through the process a lot. I've recorded, editing it, and uploading the videos. So I really think you guys are going to enjoy it, and I cannot wait for you guys to see it. If you're not following me on social media, follow me on Instagram and at Twitter at MasterShake08, MastaShake08, and you can follow my Facebook page at facebook.com/Jerome Parker. Once again, guys, thank you and have a nice day. Talk to you tomorrow. Wait, tomorrow's Friday. Talk to you on Monday.